As we've now entered the month of December, the final month of the year, that means it's time for your November market update. What's going on, guys? Alex Dunbar here, your local Surrey and Langley realtor. And in this video, I'm going to be going over a Fraser Valley market update with a specific focus on Surrey, Langley and White Rock. And by the time this video comes out, there will probably already have been the Bank of Canada meeting on December 7th to see if they're going to raise interest rates or not. My assumption is that they will by either 0.25 or 0.5%. However, historically, I don't think they've actually ever raised interest rates in December. However, we're definitely in a very unique time, but we'll just have to see. But if you are watching this video and I was right about my prediction, then I'll ask that you hit that like button. I want to try and keep these market updates a little bit more brief moving forward, so I'm going to share my screen with you and go over some of the numbers. So taking a very quick look at the statistics package, we can see that new listings lag as Fraser Valley real estate market sees third month of declining sales. No surprise there, we'll dive a little bit deeper into that shortly. However, just wanted to quickly touch on the fact that single family detached homes were on the market for 34 days, townhomes for an average of 28 days, and apartments on an average of 27 days to sell. So this is the days on market. Then switching over to the number of sales, in November we saw 783, down from the previous month, but that is expected as we typically see the number of sales decline as we head into December, as well as the number of new listings, so not a surprise there. Also, we would expect the number of active listings to decrease as well, but as you can see, this is a typical pattern for every single year before we see January hit, and listings typically go back up from there. Additionally, if we take a look over at our sales to active listings ratio, we've been sitting in a balanced market for the past couple of months now, which is a good sign. This is what we want to see. We don't want to see these crazy spikes. That is absolutely ridiculous from the past. So the market is definitely looking a lot healthier. Now moving right along and looking at the benchmark prices of the three property types in the Fraser Valley, we can see that all three types are slightly down, with detached homes down 2.2%, townhomes down 1.3%, and condos down 1.9% month over month. However, what I do want you to notice here though is that it appears as though we are starting to see a little bit of a leveling off towards the bottom of the curve, so less of a drastic drop, which I've thought we're starting to see for the past couple of months now. It will be interesting to see how things progress forwards, but I think we are definitely seeing a bit of a softer landing per se, if you'd like to see that, although this is a soft landing after a pretty drastic decline in prices. Moving right along, we can see the benchmark prices for Cloverdale this month at just under 1.4 million, just over 800,000, and just over 551,000, which are changes of minus 0.9%, plus 0.2%, and minus 4.1% respectively. Next, for North Surrey, we can see detached prices at 1.425 million, townhomes at 737,000, and apartments at 478,000, and those are reflective of minus 3.3%, minus 0.6%, and minus 2.4% respectively month over month. Moving on to the Central Surrey area, we see detached homes at 1.426 million, townhomes at 793,000, and apartments at 529,000, for changes month over month of minus 3.9%, minus 1.3%, and minus 3.0%. And lastly, moving on to the South Surrey and White Rock area, we can see detached home prices significantly higher than the other parts of Surrey at 1.850 million, townhomes at 917,000, and apartments at 578,000, for changes month over month of negative 2.4%, minus 0.7%, and minus 0.1% respectively. And lastly, taking a quick peek at Langley, we have detached homes at 1.509 million, townhomes at 833,000, and apartments at 578,000, for month over month changes in price of minus 1.2%, minus 2.3%, and minus 1.9% respectively. And for those of you who don't care about the numbers or the data, here's a quick summary for you. We're likely to see at least one more interest rate hike on December 7th before the end of the year, and then potentially another one heading into next year. I think we're nearing the bottom, although I don't think we're quite there yet. However, this is something you need to keep in mind as we continue to slowly trickle downwards heading into the new year, the best time to actually buy is just before we hit the bottom. The reason being is that you want to purchase just before we hit the bottom, because as soon as we do, you won't actually know that we've already hit the bottom because we'll already be on our way back upwards. And by this time, it's going to be too late. There's too many people that are already waiting on the sidelines to jump back in. And this means more competition and less ability to do your due diligence. Now, I'm not saying to go out tomorrow and buy the first property that you see, but I do believe there is a window of opportunity between now and about the end of March, because I'm not one to make predictions on a specific date or when the bottom of the market's going to happen, but I do believe during this period of time, you should at least get your ducks in a row and have the ability to pull the trigger if the right property or deal comes up. Now, if you're looking to sell a property, this is a completely different conversation. It really depends what you're selling and what you're looking to purchase afterwards. It's a much more complex situation. However, for those of you that are either first-time buyers, upsizers, or investors, it's a great time. And something to keep in mind as we head into December and then into the new year is people that are selling right now typically aren't just testing the market. Most of them have a specific reason that they need to sell, whether they're moving jobs, whether they can't afford the home anymore. They are more motivated and there's more opportunities to get a deal. However, there's also less inventory, so that means less properties on the market and less to choose from. So definitely some pros and cons here. A great time for investors because they're probably less focused on the specifics behind the property and more focused on the numbers, versus someone who's actually looking to move into the property and live in it for the foreseeable future. But again, please keep in mind that the numbers I've gone over today are more or less general trends. There are sub-markets, markets within markets, markets within different property types. So it really depends on your unique situation. And you need to take a holistic approach, because just because your property is worth less today than it was 3 months ago, you also have to take into account what the property you're looking to purchase is going to cost as well. Because if the net difference between the two is smaller, especially for those of you who are looking to upsize, it makes a lot of sense to purchase right now. And you need to get over the fact that maybe you're losing out on $50,000 from selling your property 3 months ago because you're saving $100,000 on the property that you're moving into. So if you'd like to further explore your situation and you're looking to buy, sell, or invest in Surrey, Langley, or any of the surrounding cities, you can scroll down and book a call with me at a time that works best for you. And if you enjoyed this video, all I ask is that you hit that thumbs up button so the algorithm will push it out to more amazing people just like yourself. And lastly, if you'd like to see more videos just like this one, as well as community tours across the Lower Mainland, I suggest you consider subscribing to my channel. And before you head out of here, why don't you check out another video from my channel, and we'll see you in the next one.